So right now, big banks are using blockchain, or they're doing blockchain projects. They're doing proof of concepts. They're doing experiments. Right now, they're not really using blockchain to its full potential. They're exploring it. They're experimenting with it. I think there is a potential later on down the line that they will fully utilise the full potential of blockchain technologies, but I don't think it will be how they're trying to use it. Right now, banks are taking 20th century business models like mortgages and loans and current accounts and shoving it all on the blockchain as an experiment. I think when people start to realise the full potential of blockchain, they'll realise there's actually new business models that banks can lend themselves to, like the management of people's data, for example. And when they realise that actually blockchain enables banks to take their historical benefits like trust and security and take them forward into new 21st century business models, I think that's when banks will realise the full potential of blockchain technologies. I think it's understanding, particularly in banking, that there isn't a threshold in banking anymore. So it used to be that customers would enter a bank, they would literally go into a bank branch, and then when digital came along, they logged onto a website or they opened up a mobile app, they crossed a threshold, authenticated themselves, did some stuff, and then logged off again or walked out again. What's happening now is it's turning on its head, it's reversing. So actually, customers are no longer crossing a threshold into a bank, banks are coming to where they are. So instead of if you want to make someone a payment, you have to go into your bank app. You can do a payment in WhatsApp or WeChat or Snapchat or whatever you want to do it in, right? You don't have to leave what you're doing to go and do some banking. Banking will come into where you are. So it's being contextual and relevant and timely. That's the secret to it. Not particularly in banking. I think there will be some interesting developments that will come out of neurosciences. So one particularly is around understanding people's intentions and that contextual analysis. So things like being able to do neural integrations, for example. So I've seen some reports where they've said that we can understand people's thought processes, their intentions, their thinking. So if somebody's looking for, if they're an impulse buyer, for example, or if they're a methodical analyst, they can look at what sort of mental states people are in and interpret that into financial decision making or risk engines like that. There's also a lot of interesting stuff happening slightly outside of neurosciences, but into CRISPR gene editing. So where they're actually able to use people's genetic codes as an identifier. There's interesting stuff happening with biometrics, where we'll be able to use people's brain patterns, brain waves as an authentication mechanism. So it's fairly unique to us, or extremely unique to us, so they'll be able to use your thought processes as an authentication mechanism. I think it's quite far out with banking. I think banking and financial services suffers because it's kind of the least fun industry. I think there'll be a lot more happening in neurosciences in things like the sports industry or the dating industry or the fashion industry. I think eventually all that will trickle down into banking, but I don't think it will happen in the next couple of years. I'm very excited actually. I haven't been to Vienna for a long time. There seems to be a good buzz here. There's a very senior level of people attending this conference. I think there's a challenge because everybody's on a different level. There's some fintech startups and some companies that are quite far along in their sort of fintech journey. There's other ones who are just beginning it, and it's good to have that kind of diversity in attendees.